So how can we take advantage of scaling in the guerrilla strategy? Well, if you think about it, guys, you should know by now that in the guerrilla strategy, we trade with the trend. Okay. Now, this gives us a massive advantage over most of the Forex courses out there, because the majority of the Forex courses out there, they will either be counter trend or they will use multiple indicators, which will restrict them from taking the most out of the market. Now, the great thing about our strategy and the way that we've designed it is that we trade with the trend. Okay, so we want to take advantage of the trend, which allows us to minimize our risk and maximize our potential of profit. Okay, now because that we trade with the trend, we are letting the market show its hand. What I mean by that is if the market wants to continue trending, then we will always be in that market. But if the market also wants to change trend, we will also know when that happens and we'll get out of the market. Okay, so why do we want to scale in? Well, one of the main benefits from scaling into a position is you double the amount of profit you make with the same amount of risk. Now, what do I mean by that? What I mean by that is if you're in one position, for example, and you're going with the trend, okay, now you've taken the risk off the table, okay, you've broken the most recent high or low, you've taken the risk off the table. Now, that first position is risk-free, okay, and the trend continues. Now, as the trend continues, you get another one of our signals to get involved. Okay, so you get one of our setups and it tells you that it wants to get in again. Now, we like to take advantage of as much of the trend as we can. So as long as your first position is risk-free, then we always recommend to scale in. Okay, because we want to trade with the trend. And if the trend continues, obviously it's going to help you and benefit you to take more profit. Now, the advantages of scaling in is that once your first position is above break even, okay, so you're at break even or a bit of profit, then we are happy for you to scale in, because then at that scale in point, you only have 1% risk, but you have 2 trades running, which means the maximum you can lose on that trade is 1%. But actually, it benefits you when you're going into profit, because your profits are times by 2. So where you would only normally have one position and every pip is worth 1, okay, now every pip is worth 2. So you're doubling your profit every pip you move, okay? And obviously, the more you scale in, the more profit you scale up. So for example, if you have 3 positions now, you then times your profit by 3, but you still have only 1% risk because your first 2 trades are above break even. Okay, so this is how it becomes really powerful, because what you're doing is you're compounding your profits, but yet not adding any extra risk to your account. Okay, so let me quickly show you on a drawing what I mean by this. So if you look here and you see a trend, okay, you get a nice pushback, you come down, okay, price comes down, gives you another pushback, okay, price will come down again, give you another one, okay. Now, if you look at this, this is how a trend works, okay. You get an impulse, you get a continuation pattern, you get another impulse, we get a continuation pattern, you get another impulse, and another continuation pattern, okay. This is a trend, okay. Now, how do we take advantage of this trend and make the most profit we can with very little risk on the table? Okay, that's what our goal is. Our goal is to minimize risk and maximize our potential of profit. Okay, so say for example, we get into this position. Okay, we see here it's broken the high, we get in on the bunker bomb. Okay, now we could have got in on the bullet depending on what price action was, but it could have been the bomb or the bullet. Regardless, it makes no difference. Okay, so we're in this position now. Once we break this most recent low here, price comes down, we move our stops from here to here. Okay, so you would either be at break even or just have a little bit of risk. Then as we come down, make this little high, we break that low. Okay, so now we have reduced our risk, okay, because our profits are now below break even. okay? Because this would be the break-even point. You would now have it above this little high, which means you have no risk on the table. Okay, now the trend continues down and you get another scale in, okay, which is here, excuse me. So you scale into this position, which is another bunker bomb, okay. Now at this point, you have this trade that is already in profit, okay. Now we are happy to get in on the scale in because we expect price to continue, okay. So at this point, you'll have your stops above here, you will have a 1% risk, but you will have 2 trades running, which means every time we move down, you times your profit by 2, yet you've only got the 1% of risk. Okay, so as we break these lows here, now you have 2 positions, okay, that have now moved their stops. So you've got one that is in profit here, and you've got the other one that is either at break even or better. Okay, now as we've come down again, the trend continues. Okay, we get this little high and then a break again, which means now we move all of our stops here. So these 2 positions now are in profit. Okay, so at this point, we've had this impulse and we've got both of our positions in profit. Okay, now we look to scale in again. Okay, again, we get our position here and we scale in. Now at this point, we have a risk here of 1%. Okay, and we have 2 trades that have 0% risk. Actually, both of them are in profit. Okay, so say for example, our stops are here above the high. So now as this comes up, okay, you can see we get into this position. We have our stops above here. Okay, we have our other 2 stops above here, and you can see we break this low again. Okay, now as this position is opened, we have 3 times the amount of profit when we go down. Okay, so as it's dropping, we have 3 times the amount of profit, yet only 1% of risk. And actually, we would have been in quite a bit of profit because these 2 would have already been locked down. Okay, so now the benefits are you are trading with the trend, you are adding to a position which is not adding any risk to your account except that 1% originally, but every time you become risk-free, then you are adding multiple scale-ins to your account. Okay, so at this point now, when we break this low here, you then have 3 positions, okay, which means you get 3 times the amount of profit. Now, example from that would be, say, for example, we got in this original position here, okay, and to get down to here, just say, for example, it was 5%. Yeah, so that one position, you would have gained 5%. But because you scaled in, you've also added a position here to here, which would be another 4%, for example. Okay, so now you've added 2 positions and you've gained 9%, okay, rather than just the original 5. Okay, then you've scaled in again here, okay, and you've taken profit here, just for an example. And this one, for example, might be 2%. Okay, so now you've made 11% rather than just 5%, just because you scaled into the position. Okay, so I hope that clears that up and you can clearly understand why we scale into the trend and why it is so powerful. Okay, so now what I'm going to do is I'm going to jump on to some charts and show you what I'm looking at. All right, guys, so let's dig in. So first thing I see here on price action is that we can see that we've had this large wick here and that price generally ranges within inside that. Okay, then we've broken this low here, okay, because we've had this low and a high break, so the trend would have changed down. Okay, so now what we want to look for is to see what happens in price action. Will we break the high or low impulsively, and then will we get our trade set up? Let's have a look. Right, so as you can see here now, price has broken up impulsively. Okay, so we want to see what happens next, whether we'll get a continuation, which will be another blue candle, or because we've just broken this high, whether we will get a red candle, which will show us that we are ascending. Okay, so we've had this red candle now. So this shows me that we are becoming ascending and that we're more likely to go down than we are up. Okay, so I won't be looking to buy. All I'll be looking to do is to get in on a sell position. Okay, So let's have a look at what happens next, unless we get a nice impulsive move up. Okay, so you can see that now it was a counter trend move. It's gone up, so that would be the high and low. Okay, so let's go forward and see what happens. Okay, so as you can see here now, we've impulsively broke the low. Okay, now what are we looking for? What is our trade setup? Okay, we have two trade setups. One is the bomb, one is the bullet. Okay, now what is the highest probability out of all of them together? Okay, because I've said to you, I like trading both of them. Okay, and if I get one before the other, it gives us higher confidence. So for example, if this is the bomb, okay, but it hits this area before we get a retrace, then I want to get involved here because it's a lot more higher probability that we're going to reject. Okay, now why is that higher probability? It's higher probability because we have this ascending channel which tells us that it wants to drop. Now price has broke through the most recent low and then it pulls back to that level almost most of the time, and when it does, we get a clean rejection. Near enough bounces straight off of this position. Now we normally put our position a little bit lower so we account for spread. Otherwise, sometimes we don't get triggered in, but that will be the highest probability. But if it doesn't quite get there and I just get a bomb, then I'll enter in on the bomb. Okay, so these are the things that we'll be looking for. Let's see what happens next. Obviously, I need to move this down. Okay, let's put this magnet on. And then this would have been the most recent high, okay, because we broke that low. So we're just now going to continue down and look for our trade setup. Right, now we can see here a counter trend move, okay? But what we need to do is to make a low and then a high break, or we need to continue slightly further up. So let's see what happens. Okay, so as you can see now, at this place, at this position where we're at, we're either going to do one of two things. We're either going to break this low and retrace, showing us it's descending, or we're going to take out this high, okay, and then we're looking for a pullback and we'll get involved because that is our signal. Okay, so this will be a little high here. We'll be looking for price to either come down, break the lows, or we expect to come up and then come down. And if it does that, that will be our position. Sorry, I've got the magnet on still. So that will be the position here, two highs, two lows, and we'll look to get in on the bunker bomb. Okay, so let's see what happens. We obviously have this in mind. We forecasted it beforehand. We'll see what happens next. So as you can see, it's taken out the high rather than the low, which means it's counter trend, and we are looking to get into a position if we get one red candle. Okay, so you can see it's pushed back up a little bit more, but it's still part of our trade setup. Okay, so I'm looking for a red candle and then I'll be getting involved. So there we go. We got the red candle now. So we will be setting our position up. Okay, now when I get in on the bomb, I generally on this pair have a 15 pip stop. But if I get in on the bullet, it's generally around 10 pips. Okay, now everyone could be different. Everyone has different risk appreciation. Everyone back tests and has different levels of risk. Some people might want to put a 20 pip stop. At the end of the day, it's all down to your own personal back testing and what you feel comfortable with. Okay, so now what am I looking at next? I'm looking at this low here to be taken out. That will allow me to minimize my risk. Once I've minimized my risk, and if it's below break even, I'll be looking to scale in. So break even or above profit. Okay, let's play on. As you can see, very close to the bottom there. And there we have it. So price has now broken this low. Okay, so now the most recent high would be here. Okay, or actually it will be here. And then what we would look for is to see what our risk would be. So our risk was at 15 pips and now it's reduced to 3 pips. Okay, so it just goes to show you minimize your risk. Okay, and that's what's great about this strategy. Every time we break a high or low, we minimize our risk, and the potential is a lot better because you minimize your risk, you maximize potential. So let's go forward and see what happens next. Okay, and as you can see here, guys, what's happened now is that we've taken out the next low. Okay, sorry, it should have been here. So it's taken out the low, yeah, and now we've managed to get our position to around break even. Okay, so you can see that this is the most recent high, which is on the break-even point. So for me, now I am risk-free. Okay, so once we are risk-free, we know that we are looking for positions to scale in. Okay, and this is what we want to do, guys. We are trend traders. Okay, we have the knowledge that we have become ascending and that we expect price to drop down. Okay, so it's come down, it's given us a continuation pattern. We expect it to continue, and then we expect it to give us another scale in, and we just keep scaling in with our positions until the market turns around from a trend. Okay, so let's do that. Okay, so you can see now. Okay, so you can see the market has impulse down. Okay, so we move this down to our lows, but our highs stay at the same place. Okay, we're still at break even, and we will not be looking to get involved unless we we do look to get involved if we get our position, but we don't want to, for example, move our high here or our profit until we get a nice push of the high or low. Okay, so for example, I will not be moving this from break even until we have a position like this. Okay, and then what I'll do is I will move this down once this low here has been broken. Okay, so the first position at the moment is still at break even, and I will not be moving that until I get a high and a low. Okay, so let's continue. As you can see now, I've had this break here. Let's continue down. Okay, and one thing I would say is strikes me straight away is we get this large wick. Now, what does a large wick mean? Well, a large wick just means that we have a warning sign, and that majority of the time what I've noticed is, especially if we're with a trend, is that price action likes to range within here. Okay, so it either likes to range for a while or it will give you a bigger continuation pattern. Okay, now it gives you a bigger one because we can see here that the market has become exhausted and it needs to pull back a bit bigger than usual. Okay, so that's something you need to bear in mind when you're trading this. Another key factor that I always account for when I'm trading and back testing is I always look for spread hour. Okay, so are we in 9 to 11? Because that's a key component. Okay, because we don't normally trade them hours, so why would we when we're back testing? Okay, so as you can see here now, price has come up. Okay, we've made this high, it's pulled back, and we would look to see if we could get involved if the position breaks this high. Okay, now the position has broken that high, and we will look to the next candle for a retrace. Okay, and as you can see, it's still going up. Next candle, if it retraces, then we would like to get in, but I can see here that this is 9 o'clock, which is an hour where it is spread hour, and I will not be getting involved. Okay, now what have I told you guys what I do? What I do is I generally wait for the high to be broken again and then retrace. Okay, because I know that if I get in here, the spreads could largen and take me out. Okay, so what I now would wait for is for the break of that high and then a retrace, and that's when I'll get into the position. Okay, I've said this multiple times to you guys. Hopefully by now you can see that. Okay, so what I'll look at next is what happens. Okay, so price has pulled back down, and again, if it goes down without me, that's completely fine. I understand that because sometimes this is the setup. Okay, this is the bunker bomb. Okay, it's just because it's spread out, I didn't take it. That doesn't mean it's going to go back up just because that's what I say I'm going to get in. It could just continue down and not take me in. Okay, so I'm prepared for that and I'm happy if that happens. Okay, so as you can see now, it has taken out the high and there is our red candle. So I would now be in this position, okay, and I will be scaling in. Why would I be scaling in? Because my first position is at break even or better, okay? So now I have only 1% risk on the table. Now, this is where the power of scaling in comes in, because the first position now, okay, it is running currently at around, I don't know, 3% there, okay? Now the power comes where I have no risk on this first trade, okay? I only have 1% risk, but every time the price moves down, we are doubling our profits. Okay. And this really can really compound quite quickly. Okay. So let's see what happens. What I want to do now is I want price to come and break this low and then hopefully take this one below break even and then follow the trend down and hopefully get another scaling. Okay. So as you can see, price is moving back up. Okay. And this is what I was saying about these large wicks. You can see that it's given us a larger correction, a larger continuation pattern, and that's generally what happens with these large wicks. Okay, you will generally get a larger correction, or you'll get a larger range. Okay, so let's continue down. Okay, so now you can see that we've broken this low. So what I'll do is I'll look back at the most recent high, which is here. Okay, that's the most recent high, which means that now both positions will be better than break even. Okay, this position will be here. So the first position will be locked in at 3.2%, and the second position will be 0.3%. Okay, and then what we're doing, guys, again, you can see each time it's moving now, we are moving times 2. Okay, so every time that we're going down per pip, we are timesing 2 every single time. Okay, so where originally I would have been at only 4.5%, but actually with both of these trades, I'm now at around 6%. Okay, so it just shows you the compounding interest on that, how it compounds so quickly. And what I'll do now is I'll just continue and show you how I'm trading this. So as you can see now, we are having a counter trend move. Okay, now we would look to see if we can get involved in a scaling here. Okay, if we can, that would be great. If we can't, then we can't. Okay, the only thing I would say is it's broken that low and it's retraced. So it's not the best setup. But again, if we get up to this little, this is a little, as we start the trend, as we break this low, we go backwards. And you can see we have this little correction here. If we come back to here, we'll get the bullet. So I'll mark that out. And if we can get in there, we'll scale into that. Okay. And as you can see, that didn't happen. So the trend has just continued. So what I'm looking to do now, I'll be moving that as my most recent high. And then we'll be moving both positions down into profit. Okay. And this is it, guys. You can see now we are compounding times 2 every single trade that we're doing. Okay. So let's keep going. And then the market is moving, starting to become counter trend here. Okay, now we don't move any of our positions yet until we break this low. Okay, but as you can see here, guys, what's happened? We've had a high, we've had a low, we've had a high, and if we get a retrace candle, we want to get involved as long as it's not spread hour. Okay, so now as you can see, guys, this candle here has completely taken out that low. Okay, so for me personally, I don't want to get involved in that because I would have preferred a smaller candle. That reason, when we take out that low, we minimize our risk. Okay, so if I was to get in here, it's very difficult to minimize my risk. I would have to wait for the next high and low. Okay, the only thing we can do is we can move now this, because that was our low, and then this was our high. And what we can do now is move our positions down. And again, guys, you can see if I was in one position, I'd be on 5.66, but actually I've added another position, which is 2.83. Okay, so you can see the power of using the scaling. Okay, so let's continue down and see what happens. So as you can see, again, guys, price action has shown us this sort of candle that wants to go up, a rejection candle. We got a high, we got a low, we got another break of that high and a retrace. Now, do I want to get involved in this? Not really. Reason being is we just broke this low and we've retraced. Okay. Now you could get in this as a scaling, but me personally, I'm not going to. Okay. So as you can see, it breaks the low again. Okay. So this is the low. It's broken that. So where's the most recent high? So the most recent high now would be here. And then what we do is we just move our positions down. Okay. Each one every time, and we scale in. Okay, now this has broken the low, retraced. Again, I don't want to get involved. Just want to manage my trades. So as you can see now, we've broken these lows. Okay, this is the most recent high. Again, we just move our profits down. Okay, and again, this is what happens now. We can see clearly that this is becoming descending, and we expect the market at any point to go up. So we just manage our trades. We don't scale into any positions. Okay, so let's continue. And as you can see now, price would have taken us out. Okay, so this is the positions we're in. This is the scaling we took. Okay, so let's just move that over so I can show you. And you can see now, guys. Okay, so you can see now, guys, this is where we got taken out. We saw the descending nature. It's taken us out. So now if we were in only one position, okay, the position would have been 6.46%, which is great. Okay, but because we scaled in, okay, with no added risk, we also added another 3.6% to that trade. Okay, so both trades would be well over 10%. Okay, and as you can see, the payout power of scaling in. Okay, guys, so this is what we look for and how we scale in on the Guerrilla trading strategy. So I hope you all have a great week.